Hey everyone, today I want to talk about SMT Divergence, what it is, how it can be applied, and a couple of indicators that I made to help spot it automatically. In case you want to follow along, you can go to Indicators and type in SMT Divergence, and you can see this one right here. That's what I'm using on my charts in this video. So what is SMT Divergence? SMT itself stands for Smart Money Technique or Smart Money Tool. ICT has said that it can be used interchangeably, but essentially it's a divergence between two highly correlated assets. And on my charts here, I have NQ on the left and ES on the right. So NASDAQ and S&P, and obviously NASDAQ is weighted more heavily towards tech, but these are two very highly correlated names. And so these divergences occur when NQ, for example, is making a higher low, while at the same time ES is making a lower low. And if we put on some timestamps here, we can verify that these lows have been created at the same time. So this time on NQ is the same as this time on ES, and the time that this higher low was created is the same time that this lower low was created on ES. And the opposite is true as well. While one is making a higher high and another is making a lower high, that could also be SMT divergence, so long as they're happening at the same time. Now, obviously this alone isn't enough to form a trade idea, given that these divergences occur all the time, and obviously you need to have some sort of higher time frame understanding before you just take a blind short off of divergent highs or a blind long off of diverging lows. So using this chart as an example, this is ES on the 1 hour. You can see we have a lot of divergences, both bullish and bearish. But with all these instances, it's tough to frame an idea for why one would want to catch this long leg here. But one thing we could do, as we would want to do with any other entry model, is incorporate some sort of higher time frame points of interest. So I'm in my Smart Money Add-Ons indicator right here, and I'm going to select this filter option, where the criteria is any imbalances or opening gaps. But right now I only want to focus on fair value gaps, so I'm going to use the 1 hour and 4 hour timeframes. And these aren't the quote unquote best timeframes to use. I'm just using some higher timeframes so we could try to filter out some of our divergences to where they also occur within some higher timeframe POI. So with that filter enabled, you can see how many divergences were taken away from the original chart, and we're only left with a couple bullish divergences here. And the reason they printed is because they occurred within a 1 hour or 4 hour fair value gap. So if we go to replay here, we can see that this area was a 4 hour fair value gap. This low just barely came into that area, and as a result, it met the qualifications to print this divergence. Same thing over here for this one. We have a 4 hour fair value gap. One of the lows creeps into the fair value gap, and so this divergence is printed. Came a little early before the expansion, but ultimately gave us a better divergence as there was some extra confluence here. Now, how would we use this in an actual trade scenario? I have an example pulled up here on ES 1 minute chart, and we can see we have this huge imbalance at 8:30, so probably from news. We continue to grind higher for the first hour or so from the New York Open, drop off, start taking some sell stops along the way, and along the way we created this 1 hour fair value gap. So a couple things to note, we have some relative equal lows right here and right here. Let me just turn this down so you can see it a little bit better. We can also see if we draw a fib from the low before news to the high of the day, that we are retracing into discount and actually a little bit further into the optimal trade entry, given that we are below the 0.618 at this point. So we're taking sell stops, we're entering a bullish imbalance and a bullish OTE, assuming that the higher timeframes are in our favor. I want to zoom in here a little bit so we can see what's going on. So as we dig into the 0.618 retracement of the morning move, you can see we're taking these relative equal lows. So we're taking sell stops. We have SMT with NQ, meaning NQ at this time was making a higher high. And so from our POI, we start to break structure to the upside with some decent displacement, leaving behind a few imbalances here. So we get that market structure shift over this swing high, retrace lower, close below a swing low, but then quickly close above that high. And we start to run away from that 618 retracement. And ultimately we end up just filling some imbalances that were left over here and retracing a good portion of the leg down from the high of the day. That's just one example of how you could actually use SMT in a actual trade model. But for anyone that wants to use the free indicator, I figured I'd cover the settings really quick so you understand how it works. Basically, this symbol right here is what you're going to be comparing the current chart to. So right now we're on ES, so I want to compare to NQ, for example. If I were to set this to ES, nothing would show up because it's the same exact chart, so there's going to be no divergences, obviously. So I'm going to put that back to NQ. This pivot strength determines how big your swing lows and swing highs need to be. So I have it set to 5 here, which means that for something like this, we're looking at this low because it is lower than the 5 bars to the left of it and the 5 bars to the right of it, which means that we need to wait 5 bars after this low is created to be able to consider that a valid low. And same goes for over here. We are only looking at this low because it's lower than the 5 bars to the left and the 5 bars to the right. So since our pivot strength is 5, this is actually going to be delayed by 5 bars from whatever time frame you're on. And I'll quickly explain why that is. So obviously, as we discussed, the divergence would be, ES here is making a higher low. So NQ from this point would be making a lower low, right? But who's to say that this just doesn't continue lower and ultimately make a lower low? There's no way of knowing that. And obviously that would print a lot of false signals if we just picked the first instance where, one was making a lower low versus a higher low and vice versa. So this is just one way to verify that divergence could be there. And that is by using a pivot strength parameter to ensure that we're at least creating a swing low and, essentially giving it some time to see if it wants to trade away from that area before we actually print this divergence. And if you don't want to wait that long, or you just want to see some quicker divergences, you can obviously decrease this to, something like 3. And now you'll see the big divergence disappeared in favor of this smaller one, because this low is lower than the 3 bars to the left and 3 bars to the right. And the same is true for this low right here. Now, the benefits of smart money add-ons in this case is that in addition to, the filters and all that stuff, we also have this detection speed option, which the more you increase this, it essentially reduces the waiting time required from the other indicator, where you have to wait if, X number of bars print on the right side to verify it's a swing low and vice versa. Instead, we can just increase this and get those divergences a little bit quicker before price, happens to take off. And we also have some flexibility here, which allows us to catch divergences that don't necessarily occur at the same time, but are still, very closely related to one another. But even if you don't use this and you're just using the free version, I really recommend that you, incorporate some higher time frame points of interest to really narrow down where you actually want to be looking for SMT. Otherwise, it just becomes super crowded and, might contribute to, paralysis by analysis and all that stuff. But anyways, I hope this was all helpful. I'll leave links to all this stuff in the description. Thanks for watching, and I'll see you next time.